Mode.
Yes, this is Andrew from Trend Following Mentor, and with a partnership with Forex. We're going to discuss about the biggest trading mistakes that are deadly. But before we start, I want to give you a disclaimer because I'm going to show you some charts and some ideas, but I want you to be aware of the disclaimer. It's right here. Just take a second or two to review it. And that really any of the advice that I'm giving isn't meant to be anyone's personal advice. It's meant strictly for education. And I'm going to be showing you some examples that are hypothetical. I am a professional trader. I've been trading since 1994. I manage money. I have a book coming out actually in 2 weeks with Wiley Books called The Bible of Trend Following: How Professional Traders Compound Wealth and Manage the Risks. I would love for you to pick up the book and learn a little bit more about trend following and how to make money out of the markets. And let me first say that it's not easy. Most people aren't successful. More than 90% people are, let's say, I'm trying to think of another word besides saying not successful, just don't achieve their goals trading. And the idea that we're doing this webinar is to help you so you become part of this 10% that are successful and consistent over time. The discussion we're going to have this afternoon is where fortunes are made. And fortunes are made by avoiding trading mistakes. There's trading mistakes that are deadly, that will inhibit you from staying in this game, this marathon of trading. Really, the most important factor in your success of trading is going to be you. I'm asked all the time, because I teach over the weekends, I teach traders how to trade. I'm always asked the wrong questions. And I'll give you an example. New traders want to know, well, what's this market going to do? What's the euro dollar going to do? Or what's the yen going to do? What do you think I should buy or what should I sell? I own, let's say if it's a stock, XYZ stock. Do you think it's going up? And if I don't agree, or I tell them I just don't know, they're even more shocked. The thing is, people, when they really get into the market and trading, they want to be right. This is one mistake right off the bat. And write this down. There's no being right. It's either trades work or they don't work. And what does that really mean? That you're going to have a trading plan. And you're going to follow this trading plan to know exactly what you are doing. You're going to know exactly what to buy or what to sell, how much to buy or sell, and then when to exit with a profit or loss. If you do not have those attributes, it's another deadly trading mistake. The biggest trading mistake, really, is not cutting losses short and letting profits run. Think about it. What is really cutting losses about? Cutting losses is saving your ammunition for when the next trade will work, because your next winner is always ahead of you, not behind you. The idea of cutting losses short is of avoiding big losses. But I'm going to give you the converse of this. I had a student in Australia that was in a great trade. And I taught him, the whole idea of what to buy, which what I do, I use meta stock. I use a rate of change where I identify the strongest markets, the weakest markets. The idea is we want to buy the strongest. We want to sell the weakest if we can put on a low-risk bet. A low-risk bet means that you're risking anywhere between 0.5% or 1% of your account size, which means, let's say you have $50,000 account size, you're risking $500. That's it. But anyway, he had this trade working, and it was for stocks. And I asked him, I said, why did you exit? It was working. He was following it. He was following with an average true range stop like I taught him. And the reason he stopped was he said he got bored with the trade. He was looking for something else. So it was a mistake, another deadly trading mistake. You need to cut your losses short. I mean, it sounds very easy. Cut your losses short and let your profits run. But when you hear a story about a guy who says he gets bored, it just doesn't make any sense. You know, going on to this next issue, before I show you some actual charts that are actually happening right now, some actual trades. It seems that there's all these investment books and even conferences where only thing people talk about are entry strategies. And these authors or speakers, they talk about this 80 or 90% reliability that they're going to promise you big gains based on these entry signals. But you know what? That's only part of the strategy. Because the fact is, it has nothing to do with risk. If you want to succeed in trading, you have to manage the risk. Entry strategies are the most non-important issue out of everything. Another trading mistake. I'll give you an example. You can flip a coin, and it's as good as a trading entry. Where you're going to make your money all boils down to your risk on that entry. Like I just gave you an example where I'm saying you're risking 50 basis points or 1%, somewhere in between there. But really where you're going to start making bigger money, for that same risk, there's a thing called position sizing. And I'm going to show you that on one of the charts. What does it really mean is for the same risk, you're able to put on multiple contracts or multiple shares or a larger position for the same risk. That is what's going to make you money, not trading the same amount every time. You know, I'll give you an example. There's these things called the Traders Expo, and I've spoken at probably 2 or 3 of them, something like that. And I kind of stuck my head into one because I was kind of shocked where one of the speakers was offering this high probability entry signal. And the irony is the room was packed. Had to be maybe, I don't know, 500-600 people in there wanting to hear this holy grail of 80% winning trades, supposedly. And everybody listened to everything the guy had to say. But you know what? He didn't say anything about running stops. Not one word was mentioned about money management. And the idea where you're going to make your money again is cutting losses short. I want to ask a question, and everyone can just kind of put your hands up, because we have people all from, seems like all over the world here. How many of you have read the Market Wizards books? Just put your hands up real quick. I can kind of see them. Okay. Thank you. Thank you. Okay. Great. Thank you, Lawrence. Okay. What is the idea in Market Wizards? And you know what? He probably has. I mean, he's on his, I don't know, 4th book already, because now he's talking about hedge fund market wizards. There were stock wizards. There was the first market wizards, probably 4 or 5 books. But you know what? Each of these managers that were market wizards, that are exceptional in their own right, they found a methodology or system that fit their personality. But you know what they had in common? There's several issues that they had in common that really accentuate the difference between, asking the wrong questions about, what's the market going to do? What should I buy? Should I listen to this guru or listen to that guru, or go listen to this speaker about a high probability entry? The difference, or the reason why these people became market wizards, and you know what? I'm going to tell you something. All of you can be also a market wizard. No one knows anything more than you. It's within your power. It is possible. But the key point goes in here that these successful market wizards, they achieve success by doing one thing. They control the risk. Controlling the risk is really against our natural tendencies. Because you know what the fact is? Any trade is 50-50. And there's really not that many people out there that can be successful predicting over a long period of time. It just doesn't happen. But the difference with these market wizards is that their profitable trades far exceed the sizes of their losses. It goes down to this point. There's only 4 possibilities. Big losses, which I urge you, Put a stop in the market immediately. That is one of the biggest trading mistakes out there. Put a stop in the market first to avoid the big losses. Then the other reality is going to be you're going to have a lot of small losses. And they're okay because you're keeping these losses small. And then the next reality is going to be you're going to have a lot of trades that you're a little bit disappointed on because that's all the market gave you. That's it. So you have these small losses and small profits. And you know what's going to happen? They offset each other. And then when you least expect it and you're consistent in doing the exact same thing that you should be doing and following this trading plan like I teach, you stumble onto some big trades. And these big trades make up for all these small losses, and this is what makes your month or your year or your week. You know, it's like you're waiting for the right opportunity, that you need to have this patience and the willingness to try. It takes courage. This is really what the first step of trading success is. Get out of the mode. I'm going to repeat myself. Forget about trying to find a guru. Forget about trying to find someone who's going to tell you where the market's going, because no one knows where the market's going. What you have to do is develop a trading plan based on basically 3 ideas. What to buy or sell, how much to buy or sell, and then when to exit with a profit or loss. Let me just jump on that again. What to buy or sell is based on a rate of change. I do it in Metastock. Let me kind of jump here and I'll show it to you. 1 second. Let it load as we're talking. But what I do is I look at a basket of markets, and then it's a simple math formula where I'm identifying the strongest markets and the weakest markets. And I want to basically try to buy the strongest if I can put on a low risk bet. A low risk bet means I'm risking less than 1% of my account size. And then the idea is, hold on 1 second, I think it's opening, hopefully. How much to buy is where you're measuring your entry to your risk. Let's just see, here it is right here. Basically, I have this right here. This is the math formula. Whoops, wrong one. Wrong one. 1 second, sorry. Ranking, here it is, right here. You look at the markets and you smooth them out. And you rank them. You're measuring the velocity. And if you want, you can email me, and I'll shoot you this formula. It can work in Metastock. It can work in pretty much many of the platforms. But that tells you what to buy or sell. Then you're going to measure the risk from your entry point to where the trade doesn't work. That you know before you start where the trade doesn't work. So you know how much to buy or sell. And then you figure out how many contracts or shares you can buy or sell. And then you follow it once you're in with a very simple idea. It's called an average true range trailing stop. So you have a plan. The idea is there's really no holy grail. And many traders that I talk to, they're always searching. Once you realize there's nothing perfect, that there are always going to be losses, and losses are okay as long as you keep them small, then you're starting to unlock the potential of compounding money and being, let's say, independent trader. You know, it's like going back to the seminars at the, let's say, the Traders Expo. It's packed. It really is packed. And you have all kinds of managers, or not really managers, I'd say wannabes, that, you know, they're offering all different methods. You know, this is my XYZ pattern, this is my 1, 2, 3, 4 pattern, this is my chair pattern, or this is my narrow range pattern. You know what? You just have to listen to what the markets are telling you. Because people will make money in the markets by finding themselves. You get in tune with the market. You listen to what the market is telling you. Because if you think about it, there's all of these trading systems and all these patterns, and any hedge fund or any successful bank should be able to exploit it. But they're not. Really what it all boils down to is flowing with the market. Let me just leave it, let me jump to this and let me just show you exactly what I mean on some examples here. Here's a euro dollar. Okay? I want you to flow. You can see it was in an uptrend. What I have here is I have the high of yesterday's bar. This is a 60-minute chart. No opinions. First of all, that's another trading mistake. Do not have any opinion whatsoever. Some of your biggest trades or biggest profits come when people take the other side and are wrong. Let's analyze. Well, we can look on the left-hand side of the chart, which isn't fair because it's already happened, but I'm going to show you what's happening today. Basically, you took out the lows of the prior day, and they failed. This is what I mean as a low-risk bet, from here to here. You can see the momentum is starting to pick up. You could have waited to here when you're above a moving average. Look at this move. You could have gotten in here at, let's say, 128-ish. You're risking down here to about 127.39. Maybe put in 10 ticks below that. You had a massive move. Huge. That's where people went wrong on the downside. Well, guess what? This is happening right now. This is the high from yesterday. Tried to take out the highs. What happened? They failed. You're flowing with the markets. Your opinion or anyone else's opinions mean nothing. Have no opinion. Listen to what the market is telling you. It's failing. All these people that think it's going to go higher, it's not. The momentum is going down on a simple MACD. You could easily have gone short here or here, and you're risking to the high above this bar. That's it. So this is what I really mean about flowing with the market. Where are the other traders going to be wrong? And there's basically like this. This is a trend breakout failure. It failed. It failed. In my book, I teach about trend breakouts, that many of them work and then many of them don't work. And there's also trend retracements. But the idea is you have these tools, but the actual entry means nothing. What means that you're risking a small amount of money and you're following a plan. You want to buy the strongest, you want to sell the weakest. So really what it all boils down to again, this is about self-discovery. You know, you're really going to make your money, as I said, getting in tune with the market, that something actually fits your personality. I use trend breakouts. I know that the vast majority of them don't work. I also use trend retracements. They have a higher, let's say, win rate, but I don't make as much money. But again, I'm trading my personality. It's almost like a self-discovery. You know, it's like, again, as I'm dealing with a lot of different traders, what I've noticed is that people are just constantly seeking advice. You know, it's like, how do you feel comfortable putting on a trade, you know, in the absolute uncertainty? And the issue is that people fail because they don't have a plan. They fail because they don't accept the risk. When you're putting on this trade, which is happening now, or here, it happened only a couple hours ago, you have to say to yourself, I'm willing to lose this money to see what happens. I have no earthly idea if this trade is going to work. And even if it doesn't work, I'm fine with that. Because I know that my next winner's ahead of me, and it's a small loss. And if it's too big of a loss for me to take, I shouldn't put that trade on. That's what I'm telling you to put on risk between 50 basis points, or that's 0.5%, to 1% of your account size. So what you're doing is you're learning about yourself, and you're putting together a trading plan that matches your personality. And you know, going back to Market Wizards, as much as the book is amazing, I can tell you I think it's bad. Why do I think it's bad? Because it makes it look too easy. And once you feel, or if you feel that trading is easy, that's another deadly trading mistake. And it's like trading has to be one of the simplest yet hardest things that we can ever do. And, it's like funny. You always hear these stories about this person who takes X amount of money and runs it up to some astronomical amount of money. I remember when I was starting out, Hillary Clinton, she took $1,000 and ran it up to $100,000. I mean, and if she could do it, you got to think, well, hey, I could do it. That's like one of my first experiences when I started trading. But you know what? It's not reality. Most people lose without having this trading plan. That's why it's so important to have this trading plan that you develop. And if you want, I can help you also. I've never met anyone who's made money consistently following anyone else's advice. No one knows more than you. Write that down. Trust yourselves once you have a plan. Dedicate yourself to making this trading plan. I know it's hard. People want to be told what to buy. They want to buy a trading robot that gives them automatic success. It doesn't work. It's really not easy. Again, going back to Jack Schrader and his gurus and market wizards, one thing in common: low-risk ideas. Low-risk idea here. Low-risk idea here. And you can watch some of these other segments that we had with Forex, and I talked about low-risk setups. Or you can go to my blog on trendfollowingmentor.com and look for different ideas. But that is the idea. The secret to success, and your success, is going to be based on low-risk bets. And it is a bet. And these great traders, and you too can be a great trader, is by you're managing your money and you're determining a position size through a trade. Let's say, depending on your account size, let's just make it here, that you would have gone short at the low here. So you'd be risking from 129, let's say 48, up to 130.22. All depends on your account size. You tell me, is it a $50,000 account? Is it a $100,000 account? Risk 1% of that account size. That's what you need to do to figure out in order to stay in this game. First of all, if you look at it, and again, if I want to look at myself in the beginning, I've been trading since 1994, and it's been tough. Probably made every mistake possible. Really, every mistake possible. You go through two stages. That initially, even myself, I looked for people to tell me what to buy or sell. And then I woke up and I realized that I needed someone to tell me how to do it. And then you know what? There are very few people out there who can really tell you how to do it. And then, you have these two processes that don't work. Most people don't survive. What it really comes down to, this final stage, is awareness, or the self-discovery, is realizing that you can do it, that you can put this trading methodology together that fits your personality. You'll make money by finding yourself. Achieve your potential by when you're getting in tune with the market and you flow with the market. You're listening to what the market is telling you. Again, forget about the idea of opinions. Opinions are the quickest way to lose money. The key to this presentation really is the importance of utilizing a stop. Really, it's to exit when the trades don't work, like I showed here. Let me jump to 1 second. Let's look at some. Okay, this was earlier. Perfect example of when the trade didn't work. Had a high, momentum was falling. I thought this was a good point to go short. Well, guess what? It went to the lows and then turned around. So I knew to cut my losses here. The trade didn't work. Oh well. Next. Let me see what else I had here. 1 second. No, I didn't have the yen. I have a good one. This one. Natural gas. This was Friday of last week, actually. Okay, this is crude, and this is natural gas. What's happening here? Listening to the market. Tell you exactly what happened. This was the prior high. Took out the highs. I manage money for a living. I have 3 trading programs. One of my systems bought the highs of this at 406. Was doing a trend breakout, which, again, sometimes they work, sometimes they don't. But on a 60-minute chart basis, flowing with the markets, what's happening here? This was the prior day's high. I tried to take it the prior day high out, and it didn't work. It failed. And then it started going below the moving average. And the MACD was negative. What a great low-risk bet from here to here. And then it kind of chopped around, and then, wow. This is what happens. And really what happens is you got to think about your account size. Depending on your account size, you can put on more contracts because it's a low-risk bet. So this is just one setup of numerous. The setups or the entries don't mean anything. What mean is the low-risk entry, small bet, and then sometimes you stumble into some big profits. Again, typically, traders trade their beliefs about the market. They know where the market's going. No one knows where the markets are going. And the other, I'd say, huge, again, trading mistake, and I can really go on and on for hours about trading mistakes, that traders look for this holy grail. They look for this magical indicator. Let's go, let me just jump back to Metastock and I'll show you what I mean. There'll be a million indicators here. You don't need a million indicators. You don't need sophisticated indicators. Simple and robust work. I'm not looking to sugarcoat anything to you, or there's nothing for me to sell you. I'm just giving you the absolute reality here. And when you're going to look at these indicators, which are going to pop up in a second, think that's enough indicators? There's probably even more. Let's just put up a chart, I don't know here. This is something I'm looking at a retracement trade on, actually. It's not working, but I didn't enter yet. It was here. But if you look at the indicators, you have a zillion indicators. Look at all of these. Would you think any of them are magical? Guess what? They're not. This is what the point is. There is no magic indicator. There is no magic system. Really what it boils down to is getting in sync with the markets and listening to them. And once you realize that there's no holy grail, there is no magic system, that really the answer is within you, you're on your way to start compounding money. And that's really what the goal is. You have to be aware of what holds you back. This is what held me back. You have to think and start to learn and to think about possibilities and probabilities that I'm taking out this high and it's failing. It might not keep on working. Or let's look at this one. Hold on, let me shift this over. Here. Took out the highs, went down, didn't work. I would have thought, hey, this is a good trade. Ka-ching. Didn't work. So you think in terms of possibilities that anything can happen. It's not the trading system. It's not the trading methodology or the entry. It's really the concept of making a trading plan. What to buy or sell, how much to buy or sell, and when to get out with a profit or a loss. Most people don't spend any time thinking about the exits or the position sizing. When you think in those terms, that's the only way you're going to start compounding money or start getting to your goals. Let's jump back to the currencies and see if there's anything that we can see. And I don't look at a lot of currencies. I just have a handful. I have the majors. It's simpler that way. I look at them on an hourly basis. Hold on, 1 sec. Anybody tell me if they see anything here? Let's see a raise of hands if anyone sees anything. I want to see what you guys are picking up. Any hands? Okay. What's interesting is this high failed here, even though it was minor. What's more interesting is this low fails here. You went low and you went lower. This is what I'm trying to tell you. Where are people wrong? People are assuming this is going to keep on going down, going down, going down, up, and then it turned around. From here, you could have drawn a line. Let me draw a line over. That could have been an entry point, and you're risking down to the lows here. What the idea is that you have to find a methodology that hits your comfort level and what you feel comfortable with. This is an interesting trade with the British pound right now. Prior high, took out that high, and look what it did. It failed. What else is happening? We're below the moving average. What else is happening? The MACD is negative. If you really want to make that bet, which is a simple bet, you'd be risking from 160, 20-ish to the highs here. You see what happens. Because you have to think of all these people that have been buying all along from here, from 158 going up to this 160. They expect this to keep on going on. And they could be very disappointed at this point and wrong and lose money if it turns around. This is what I'm talking about, taking a low risk bet. I have no earthly idea if this trade will work or not work. All I'm doing is I would be putting my chips on the table, seeing how much this will cost me to see if it'll work. I'm below moving average here. I'm straddling another moving average here. And I'm risking to the highs. This is what trend following is. At this point, I'm going to stop. I'm going to see if there's any questions. And if you have questions, please put your hands up, and then I'll answer them. Or if you have a question, let me go to here, questions. Okay, hello. I'm not sure who asked this question. Let me see. Hello, Lawrence. Hello, Lawrence. How are you? Okay. Let's see if there's any questions, though. Okay, so it seems like you guys get what I'm trying to, hopefully you get what I'm trying to get across to you. It's not really about trying to find this magical indicator or anything like that. Here, let's see what Wanda has to say. How do I get the MAC on my chart? Okay, I'm not sure which trading platform. Just tell me what trading platform you use, what you're using. Because I'm using, actually this is from my, okay, MT5 I'm not really familiar with. I mean, I use, this is actually from my broker that I'm trading with, or I use Metastock. But again, an MACD is a very simple, very basic idea. And the whole idea, let me explain to you how an MACD works. When you're basically, you want to see it increasing if you're long, you want to see it decreasing if you're short. Many times you're going to have divergences. Like this is a divergence here that actually didn't work. What happens is this is higher and this is lower. But what's happening here is you're lower and higher. This would have been an interesting point to go short. And it really didn't work so great. That's why also what I'm saying is you have to bear in mind that anything can happen. ACH, anything can happen. Very simple indicators I'm using here, not rocket science, moving averages, MACD, and I'm listening to what the market is telling me. Here, this would have been a short. Maybe it worked a little bit. Didn't work that great. This is a very one, and probably would have been a scratch trade if not a loss. Maybe people at ForexP can help you as far as getting on there. Okay, Lawrence, 1 second. Check the trend. Which time frames do you use to gauge the trend? Well, you can do a couple things. 1 second. Basically like this. I trade dailies for my money management business. I put my orders in first thing in the morning, my morning, which is in Chicago night. And then I also do my Asian orders at around 4 o'clock in the afternoon, 4:30. So my order, I'm using dailies. It all depends, again, when you're trying to figure out how much you're willing to risk. I look at 60-minute bars if I'm doing intraday trading. And as far as determining the trend, well, you can use an ADX. And again, there's no magical indicator. An ADX will just tell you when it's starting to trend. And you can use the parameter of saying, well, if it's above 30, it's trending. And you look to jump aboard. But you can look for trends. You never know when a trend really starts. And that's why I had that losing trade so far with natural gas. It was a trend breakout. You're buying something that didn't happen until that point, and you're hoping or assuming that maybe it'll continue. You have no earthly idea. We don't know. So what I say is I'm willing to take that bet. I'm willing to risk 1% of my account size. It was the strongest, one of the strongest commodities at the time, and I put my chips on the table. Let's see what happens. And if it doesn't, then I'll get taken out with, basically I have an average true range moving stop. What exponential moving average do you have on this? I probably have a 10 and a 30. But you know what again? Baki, if I'm saying your name right, let's not worry about the entries. It can be a 50 exponential moving average. It can be a 30. It can be a 20. It doesn't matter. What really matters is getting in sync with the market and flowing. What is the market telling me at this point? The moving averages will tell you at this point that, yeah, it's pretty healthy. And we're testing at a couple points here. But you know what? You know you're going up, and you know at this point, maybe you're failing. Maybe at 60, 57-ish, it's not going to go any higher and can turn right back down. Because right now we're below the moving averages. And again, you get to pick them. It doesn't really matter. And the MACD is negative at this point. Okay. Let me just jump back to here. If there's any other quick questions. Anyone else have any other quick questions? Let me just jump here again. Basically, oops. If you want, here, let me do it this way. It's an easier way to do it also. 1 second. This is the way you can contact me. You can email me at andrew@trendfollowingmentor.com. And if there's any way I can help you, you email me. Be more than happy to help you. I also have actually a couple things I can give you. These are great. Hang on 1 second. Kindle. And you can email them to me. Email me, and I'll send you these books. Send it to you for free. The only thing I'll ask you in return is if you can just write a review on Amazon. I have this, The Realities of Trend Following. I'll email it to you for free. The Paths of Profit when investing in the stock market. It's the same thing if you want to use it for Forex. And I have another book here, Psychology. I'll send it to you for free. Okay? Let me just jump to this last question. Whoops. If I trade in 1 hour time frames, do I check daily trend direction? That's a good question. I do. I want to make sure that I'm always flowing in the right direction of the trend. Yeah. Yes. Do you always look at one direction, one higher? Exactly. Okay, everybody. I greatly appreciate your coming to this webinar. I really, really, really hope that you get to the point of realizing some of these trading mistakes that are deadly. Again, quick wrap up. Trading without stops. And And there's people that say, oh, you don't have to put a stop in. You know, you have a mental stop. Well, I've seen people freeze. And they think it'll come back, and it doesn't. The other major trading mistake is realizing that no one knows anything more than you. You know as much as everyone else. No one knows the future. There are no gurus. There are no magic managers. You're as good as everyone else. Stop searching for the Holy Grail. Develop a simple, robust trading plan that flows with the market. And if you want my help, I can help you. I help a certain number of traders. The idea is do not risk more than, again, between 0.5% or 1% of your account size. Look for low-risk setups or low-risk bets. If you can do this, you're on your path to progress. Understand that this is not something that comes easily. It's a process. It takes time. Give yourself patience. Again, I want to thank you for coming and attending this. If you want to contact me, you can email me. The best is to email me. I prefer emailing as opposed to a phone call because I'm swamped. Again, I thank you for coming to this, and if there's any way that I can help you, I'd be more than willing to help you. Thank you very much.